Hello friends, we were discussing about goodwill in admission of a partner. The chapter is admission of partner, and in that we were discussing about goodwill. The goodwill is the reputation earned by the firm, reputation of the firm in the market, right? Now, why we are studying goodwill in admission? Because the new partner who is joining the firm, he will enjoy the reputation that has been earned by old partners. So he must compensate the old partners by paying premium for goodwill. Clear? So the new partner must pay premium for goodwill. To whom? To old partners. In which ratio? In sacrificing ratio. What is sacrificing ratio? The ratio in which the old partners sacrifice their share. How to calculate? Old share minus new share. This all we have discussed in the previous lectures, right? So in the last lecture we were discussing about hidden goodwill. What is hidden goodwill? That sometimes we are not directly given the reference of goodwill, right? What we are given is that the new partner brings some capital, brings the capital for his share. Then how to calculate goodwill was, first of all we'll calculate net worth of the firm on the basis of new partner's capital. How to calculate this? New partner's capital that he is bringing in multiplied by reciprocal of his share in profits, right? This is how we calculate the net worth of the firm on the basis of new partner's capital. We will subtract the net worth of the new firm, that is old partner's capital plus any reserves appearing in the balance sheet plus any profits minus any accumulated losses minus one more thing, any advertisement expenditure, or I can say which is not really an expense but shown on the asset side of balance sheet. This is fictitious asset, right? Plus new partners capital. This is the net worth of the new firm. New firm means including new partner. Whatever the amount we get after subtracting this is goodwill, that is hidden goodwill of firm. From this we can calculate the share to be brought in by new partner, right? So this is what we were discussing in the last lecture, and we did some practical problems. We'll do some more practical problems on this. So let's see the practical problem on this. We are given the balance sheet of X and Y who share the profits and losses in the ratio of 3:2 as at 31st March 2016. cash at bank, debtor, stock, furniture, plant and machinery, and advertisement expenditure. On the liability side, we have sundry creditors, reserves, profit and loss account, X capital, Y capital. They admit Z as a partner from 1st of April 2016 for 1/5 share in the profits of the firm. Z brings 50,000 as his capital. Give the journal entry for adjustment of goodwill. Now, what is the first step? Calculate the net worth. Calculate the net worth on the basis of capital brought in by Z. What is the capital? 50,000 for 1/5 share. Let's see. The first step is net worth on the basis of Z's capital. This I will say A. Right? So what is the net worth on the basis of Z's capital? This is capital brought in by Z, that is 50,000, multiplied by reciprocal of his share, that is 5. So this comes to 2,50,000. Clear? Second, net worth of the new firm. This I told you is old partner's capital plus reserves plus any profits minus any losses minus any fictitious asset. This thing, profits, old partner's capital. Now, first of all, we will see the balance sheet. We have the old partner's capital, X capital as 48,000, Y's capital as 32,000. Right? So we will say X capital 48,000, Y's capital 32,000. Now, any reserves? Yes, we have the reserves of 60,000. We'll say reserves 60,000. Any profits? Yes, profit and loss account 25,000. This represents profit of 25,000. Profit and loss account 25,000. Next, any loss? No. Any fictitious asset? Yes. Advertisement expenditure 15,000. This is 15,000 negative. So what is the net worth of the new firm? This comes to 2 lakh. Now, on the basis of Z's capital, the net worth should be 2,50,000, but actually the net worth is turning out to be 2 lakh. Then this difference is the hidden goodwill of firm. Now, goodwill of firm is A minus B. What is A? 2,50,000. What is B? 2 lakh. So the goodwill of firm is rupees 50,000. What will be the Z's share in goodwill? 50,000 into 1/5. This is the amount that Z has to bring as premium for goodwill to compensate the old partners for loss of share. Now, what will be the journal entry? The journal entry will be Z's capital account debit to old partners. This amount of 10,000 has still pending to be recovered from Z. So we will debit the Z's capital account and we will credit the X and Y, who are the old partners, account in the ratio of 3:2, which is the old ratio. If only the old ratio is given and the share of the partner is given, then the sacrificing ratio is always equal to old ratio. So this comes to 6,000 and 4,000, 3:2. This is the ratio. Clear? So in this case, we will first of all calculate the share, the hidden goodwill. For that, we will calculate the net worth on the basis of capital brought in by new partner. Then we will calculate the actual net worth of the new firm, and from that we will calculate the goodwill of firm. And out of the goodwill of firm, we will calculate the new partner's share of premium for goodwill. Clear, friends? This is a very simple topic relating to goodwill, right? Now, let us see one more practical problem. Let us see this practical problem. A commenced his business with a capital of 5 lakh. On 1st of April 2011. During the 5 years ended 31st March 2016, the results of his business were: first year a loss of 10,000, second year a profit of 26,000, then again a profit of 34,000, then 40,000 and 50,000. During this period, he withdrew 80,000 for his personal use. During this period means during a period of this 5 years, from 1st of April 2011 to 31st of March 2016, right? On 1st of April 2016, he admitted B into partnership on the following terms: that goodwill is to be valued at 3 times the average profits of the last 5 years, right? B will have half share of future profits. He will bring in his share of goodwill in cash. Clearly given that premium for goodwill is being brought by B in cash. He will bring in capital in cash equal to that of A after his admission. What it means, that after the admission of B, what will be the capital of A? Equal to that he will bring the capital. Calculate the amount to be brought in by B and pass entries to record transactions pertaining to admission. This is a very good question. For that, first of all, what we are going to do is we'll calculate goodwill. It is given how to calculate goodwill. He says the goodwill of the firm is to be valued at 3 times the average profit of the last 5 years. We have the profits of the last 5 years. We'll take the average, multiply by 3, that will be our goodwill. Let's see. Now, the first thing is calculation of goodwill, right? Now, average profits of last 5 years. This will be 10,000 loss, then a profit of 26,000, then again a profit of 34,000, then again a profit of 40,000 and then 50,000. Divided by how many years? 5. So this comes to 1,40,000, right? So what is the value of goodwill? value of goodwill is average profits into 3, 1,40,000 multiplied by 3. Right? This comes to, sorry, this is not one, this is 1,40,000 divided by 5. This turns out to 28,000. So this is 28,000 into 3. This comes to 84,000. Right? Now, what is the share of goodwill to be brought in by the new partner B? B's share of goodwill. What is it? 84,000 into share in profits. This comes to 42,000. Right? So this is, we calculate goodwill. Now we will calculate the A's capital before the admission of B. A's capital on 31/3/16, that is a day before B's admission. His capital at the beginning, capital on 1/4/11 is how much? 5 lakh. We'll add back the profits of 5 years from 11 to 16. That comes to 1,40,000. And he withdrew some amount. See the question. They say he withdraws 80,000 during this period. What are the drawings? What are the drawings? 80,000. So what is the amount of A's capital on 31st of March 16? This is 5,60,000. Right? Now 3. A's capital after admission of B. What will be the A capital after admission of B? See, when B is admitted, B will bring his share of premium for goodwill. That will be credited to A's capital account. His original capital is 5,60,000. So what will be the A capital? 5,60,000 plus B's share of goodwill. What is B's share of goodwill? That we have calculated as 42,000. Right? So this will be 5,60,000 plus 42,000. This comes to 6,02,000. Now what is the question saying? Question says B will bring in capital in cash equal to that of A after his admission. So what is the capital of A after B's admission? 6,02,000. So this is the amount of capital to be brought in by B. B's capital will be 6,02,000. Now the question clearly says that B will bring capital as well as premium for goodwill in cash. What is the premium for goodwill? 42,000. Capital 6,02,000. So we can easily pass journal entry, which will be cash account debit to B's capital account, that is the amount of capital brought in by B, and to premium for goodwill account. sorry, the B's capital is 6,02,000. Premium for goodwill is 42,000. So this comes to 6,44,000. Now this premium for goodwill will be adjusted through the old partner's capital account. Here the old partner is only one person, that is A. I'll say premium for goodwill account debit. This whole premium will go to A, 42,000 and 42,000. So with this we end the topic of goodwill and admission of partner, right? This was a little typical question in which we find out the goodwill, although the information is all given in the question. Everything is clear. They asked us to calculate the goodwill. They have given the method for calculating the goodwill. Then they tell us about the B's capital, that it will be the A's capital plus whatever the B is bringing. So for that, first of all, we calculated the A's capital. Then we calculated A's capital after the admission of B, that is equal to B's capital. Then the journal entry, because the question clearly says that the capital and premium for goodwill is being brought in cash, right? We say cash to B's capital to premium for goodwill account. Then this premium will be adjusted through the old partner's capital account. In this case, the old partner is only one person, that is A. Clear? So with this we end the topic of goodwill. In the next lecture, we'll start with a new topic of admission of a partner, that is revaluation of assets and liabilities. This is a very similar topic, absolutely similar topic to what we studied in change in profit sharing ratio, right? So friends, I will suggest that you go through this topic of in change in profit sharing ratio. I will explain you here also in the next lecture, but I will go through a little fast in this because the topic is absolutely same, no difference at all. So what we have studied in the chapter of change in profit sharing ratio, there is only a little bit difference, the only difference of the sharing ratio, that's it. I will explain you this topic, we will do some questions, don't worry about that, but I will say for detail of this, you must first go through the chapter of change in profit sharing ratio, right? That's all for this lecture. Thank you friends.